Hello, everyone. Welcome back to Upside Down Data. So today is Tuesday, September 6th, and yesterday was Labor Day, which is a federal holiday in the US, and that means that markets were closed. And so this very red price action that we're seeing here on the Bitcoin price chart, on the weekly, and across the markets is setting the tone for this week. We're starting off red, and this downtrend for Bitcoin continues. At the same time, if we take a look over at the Bitcoin dominance chart, we see that there's some interesting things happening. And that is that Bitcoin dominance is retesting this 39% level, which is a multi-year low, last visited at the beginning of 2022, and before that, not since the middle of 2018. This is a range that Bitcoin dominance has been bouncing around in from about 40 or 39 or 40 up to about 48 or 49 for quite a while now. And now retesting the bottom of that range is noteworthy. And what that tells me is that now is a good time to look at um, how Bitcoin is performing relative to altcoins and vice versa. How's the money flowing in the market, and what's the relative performance of different sectors? Bitcoin dominance, when it's testing a threshold or crossing a threshold, triggers interest in how alts and Bitcoin are performing relative to each other. So, going to take a look at that. Going to look at some risk information and some trend information from our in-house risk indicators, and take it from there. So, if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter for updates about our risk indicators and more. So, as I mentioned, this is a very important Bitcoin dominance level. If we pull up the Ethereum to Bitcoin ratio, we can get a kind of a similar message coming through the charts, which is that relative to Bitcoin, Ethereum has been performing extremely well since June. After bottoming at about 0.05, it's now bounced quite substantially and is up at about 0.083, 0.084. And that's an important level too that the Ethereum to Bitcoin ratio tested in late 2021 before the current pullback that it's in. Again, this is the weekly chart. So, like with the Bitcoin dominance chart, this tells us that there's some interesting things happening in terms of market leaders versus market followers right now. Is Bitcoin leading, or is Ethereum and potentially other altcoins leading the market? Clearly, right now it's Ethereum. And a major reason why Ethereum has been performing well and has been kind of leading the market in terms of volatility is because of the Ethereum merge, which is impending. The Ethereum merge, in case you haven't heard, is the process, which is a very complex software upgrade whereby Ethereum is going to make the transition from proof of work to proof of stake. And this has a number of benefits for efficiency, in terms of energy, in terms of transactions, potentially bringing down transaction costs. That's all detail for another day. And in fact, if you're interested in a deeper dive into the Ethereum merge and specifically the implications for Ethereum's price that the merge has, check out Mark's video from yesterday, which discusses both the fundamental implications of the merge and the likely price action implications of the merge, kind of bringing together fundamentals with a technical analysis, including a look at our risk and trend indicators. So check that out if you're interested in more on the Ethereum merge. That was Mark's video yesterday. But what I want to highlight today is just that there are some kind of atypical behaviors coming across on the charts here, specifically when we look at Bitcoin dominance and we look at the Ethereum to Bitcoin ratio. Now, even as I make this video, we can see that the price of Bitcoin is pulling back pretty substantially, and it's now just about to retest the 19K level, after opening the day above, up at around 20K. It's been kind of hovering around 20K over the last couple of days. And now that the markets have reopened and we have regular trading resuming, this pullback has continued. So, so what's going on here? Well, what I want to do is just try to, give you a sense of how a number of the top altcoins are performing, and specifically take a look at the risk levels that we're seeing across a number of the top assets, including Bitcoin and Ethereum, and several of the other leading market cap tokens. And we'll also pull up, data on momentum and trend. And what I really want to do is more than analyzing each one of these assets on their own, is to give you a look at our website, which, as you might know, is under development. This is a website that we're building to make available to you and to the public. Um, our risk indicators and our trend indicators, all of the data we use here on the channel, and that uh, folks have come to rely on, and that we share on social media more generally, are going to be available in real time on a website. So I'm just going to give you a quick look at that, so you can get a sense of um, what that will be like um, when it's launched live in the not too distant future, in the coming weeks or perhaps the next couple of months. So anyway, let me pull that up here. This is not the full range of assets that we have covered, but it's a number of the most important ones. And you can see them arrayed here on the left with the price and market cap information. And then over here on the right, we have our risk indicators. As you might know, we have short, medium, and long-term UDPI risk indicators. We also have a momentum bias indicator, and we have a trend confidence indicator and a market direction classifier. We've discussed all of these in detail in previous videos, and we'll continue to clarify how exactly to use these strategically, especially how to use these in combination with each other. And when we launch the site, we'll have information on each of these indicators to explain how to use it most effectively. I'm not going to get into all of that right now, but where I gravitate toward first when I'm reading this is the long-term UDPI, because that tells you the realistic upside versus downside potential for a given asset on the scale of months to years. So this is highly diagnostic about macro market cycles and managing your risk as a long-term investor. And we can see when we look at the long-term risk that we're still in fairly significant upside potential territory, but it's a bit mixed when we look across assets. Obviously, Bitcoin is the market leader, and its long-term UDPI is minus 2.32. This is a scale that goes from -5 to +5, and when we see these negative values, that indicates that there's more upside potential that the model considers to be realistic than downside potential. So that means that the risk to reward proposition on that asset at that time for that time frame is relatively favorable. That is the case for Bitcoin. When we move over to the medium and short term, which respectively take into account information on a scale of months to weeks for the medium, and the short term scale of weeks to days, we see that risk gets even lower on that short term. And that reflects the recent downward price action that we've seen, which the short and medium term UDPIs consider more rapidly and take into account more rapidly than the long-term UDPI does. But across, all of these timeframes, there's a reasonable level of agreement that Bitcoin is moderately oversold. Now, that's not the case necessarily for all the other assets. Ethereum, we just looked at the chart and saw that Ethereum has been outperforming Bitcoin. Can see that on a long-term perspective, Ethereum is actually fairly neutral in terms of its risk to reward ratio. Over time, and with volatility, it's kind of reset and evened out. On the short term, we still do see that Ethereum has been sold a bit, and there's some upside potential that's opened up on the short term. This kind of uh, aligns with the timing of the merge. It suggests that on the short term, and the merge is a short term fundamental development, it's scheduled for September 15th, so less than 2 weeks from now, there is some upside potential, and we could see Ethereum run into the merge. So that's confluence between fundamental and technical considerations. At the same time, we should temper our enthusiasm about this, because we see that on the medium and especially the long term UDPIs, there is a more neutral reading, and that means that there's potential for downside. So Ethereum's outperformance recently has kind of translated into this relatively neutral reading, particularly when we look at it relative to Bitcoin. So Ethereum has been overperforming Bitcoin recently, and as a result, its risk to reward proposition is less attractive, especially on the long term. But also reflecting the fact that it's been performing well recently, we can see that it's above its critical levels on the trend confidence and market direction classifier. Um, Again, just for efficiency, I'm trying to illustrate the information here, and how you can read it in an efficient way. So I'm not going to get into a great deal of detail about the trend confidence indicator, the market direction classifier, and how to understand them. But they are critical levels above which the market direction and trend are considered to be more bullish, and below which they're considered to be more bearish. So since I actually posted this, Ethereum has dipped below these critical levels. It was sitting above these critical levels, again reflecting this recent positive price action, and has now lost these critical levels with this move down over the last couple of hours. If we scan the rest of the market, a number of these other top assets, we're looking at 11 assets here. You can see that, again, there's quite a mixed bag. There are some like Solana, which are unambiguously low risk, meaning that even on the short term, there's considerably more upside potential that the model considers to be realistic than downside potential for Solana. That's true to a degree for some other assets, including Polkadot, Avalanche, and even ADA, and even XRP. We should show some love to XRP when it's deserved, because it doesn't get a lot of love these days. So there are some, very attractive risk to reward propositions on this chart here, but there are some others that are, like Ethereum, more of a mixed bag here. So Matic, um, from a long-term perspective, doesn't really seem to be giving us much of an edge, even though on the short term, it has been sold a bit recently. So, this is just a quick illustration here and a teaser, really, of one of the things that you'll be able to get on our website. Forgive that there's some layout issues here that we're going to fix, and everything will be tip top by the time we launch. But I did want to give you still a quick look at this, and you can see how efficiently you can integrate information here across these different classes of data analysis and the indicators that we use. So, I think the moral of the story here is that the Ethereum merge is really the dominant narrative in the market right now. Ethereum has some short-term upside potential, and it could run. Um, and there's certainly the narrative support for that kind of movement. That said, uh, there is reason for caution. The market as a whole is very bearish. The Federal Reserve continues its policy of quantitative tightening. There's a lot of pessimism in the markets as a whole. Many people are expecting much lower. Um, and the broader macroeconomic conditions with inflation, and the effects that that has on people's sentiment and willing to take on risk are not ready to lift yet. They're continuing. So the market is not really set up for a major sustained rally. So, September 15th is when the Ethereum merge is scheduled for. We could be seeing some rallies up into then, and that could have some interesting implications for Bitcoin dominance and the Ethereum to Bitcoin ratio. What happens after then, though, is more of an open question, and I think that we should maintain our bias toward the downside. We see a lot of negative values on the momentum bias indicator here across these assets, and that's one way of telling us that we are still in a downside momentum phase in the market. So, a few things to keep in mind here, and a little bit of what you can anticipate when this site goes live in the not too distant future with these assets and many more, and additional tools, graphing tools, and other analysis and information. So, anyway, hope you guys found this useful. Hope you find this teaser of the website to be interesting, and thanks for watching.